Hello everyone and welcome to this week's live stream from Exness. I'm Michael Stark, Financial Content Leader, and here I'm going to be going through some of the most important releases that have been happening recently, some important upcoming data, looking at some charts, and perhaps I think most importantly looking at your questions, whether that's instruments you want to be analysed or it might be anything else that's relevant about trading that you want to ask about. So it'd be great, it would be awesome if you have any questions. So before we get going properly, I would encourage you please to drop a comment. Can you hear me properly? Where are you joining from? What are you excited to learn about in this session? Drop any comment please in the chat. I'm going to read all the comments out, and hopefully there should be many questions, because that's what makes this most exciting thing, I think. Getting comments, getting questions from people is what makes live streaming, I think, worthwhile and exciting. So in the meantime, before we start, please remember that none of what I'm going to be saying here is advice or a recommendation to trade, and it's not based on your personal circumstances. I don't know everything. I, of course, make mistakes like any other trader does, so please just don't blindly follow what I'm saying. You always need to do your own research. You need to manage risk. Remember that if you make losses, you're accountable for the losses, just as you're accountable for the profits if you make profits. But hopefully you do find something informative in this session. So Ryan Jarius says joining from Uganda. Welcome, Mr. Ryan. Thanks very much for joining us. Mr. Karen Rajput says hi. Welcome, Mr. Karen. Thanks for joining us. And the sound is good, says Mr. Ryan as well. Great. Thanks very much, Mr. Ryan. So to kick off, as we usually do, I'm just going to briefly introduce some of the important features of Exness's client area. So here we are in the personal area, and please remember that this is a demo account. So any analysis of charts and any look at specific trades is not on a live account, it's on a demo account, and it's not a recommendation or a suggestion for you to do the same on a live account. So if we go firstly to the analytics tab inside the personal area, we can see firstly some ideas for trades, some signals essentially that come from Trading Central, and it covers a variety of different instruments. And if you click on any specific one, then you can get the primary signal, what they think is the main direction with which you might be able to trade if it fits you after having done his own research, and also an alternative as to what the other direction might be if the primary direction is not realized. You can find that for a range of different instruments. And then if you click on Market News, which is also under the tab on Analytics in the personal area, then you can get a list of all the important and some moderately important news that affects quite a wide variety of different forex pairs and other instruments besides, not just forex pairs. And also from here you can access the economic calendar. So from the same tab under Analytics, you click on Economic Calendar, and then that can take you to the calendar on Exness's website. And soon, within hopefully the next few weeks or few months, this is going to be upgraded. So that's exciting. That's the kind of insider information that I can give you there. This is going to be upgraded and has, of course, some utility. But for this particular session, we're mostly going to be looking at this one, which is Trading Economics' calendar, for a couple of main reasons. One of the main reasons is it's just a bit easier to filter with, and another primary reason is it gives you the consensus Trading Economics' forecast and the actual release, as well as the previous one with the chart all in the same place. So that's why when we're going in this particular session a little bit more in-depth into fundamentals, that it's useful to have this kind of in-depth calendar, as opposed to using a calendar that simply lists the data that's due to come out. Henry Daka says love from Zambia Bossman. Great, thank you very much, Mr. Henry, for joining. And Mrs. Joyce says hello, Michael, streaming from Nairobi, Kenya. Welcome back, Mrs. Joyce. Nice to see you here every week. It's good to have a regular viewer. So hopefully everybody, you have a good session, and I would encourage you, please, if you have any questions at any point, please drop them, and we should be able to answer both the questions as we go, and I think hopefully we can also answer any general questions towards the end, and should have plenty of further time at the end for questions. So in general, some of the main economic data that's coming up this week is American personal consumption expenditures. That is important because the PCE, for short, is the Fed's preferred measure for inflation traditionally. They prefer to use PCE as opposed to CPI, Consumer Price Index. So that's usually an important release. We might actually have to bring it down a little bit in terms of impact to get the annual figure that we might want. So just give me a second to figure that out here. So if we bring up annual non-core PCE, then we're at about 2.8%, and I mean the consensus is that we're also going to be about 2.8%. So it's slightly below 2.8% for the last release that we had. And let's see how that plays out. I mean, it's unlikely that PC in itself is going to have a very significant impact on many markets, but it's an important release that we do certainly want to try to watch. And also coming up this week, if we just bring back the top one, also coming up this week, we have the Canadian job report. That might be quite important, since I think one of the instruments possibly in focus this week is going to be the Canadian dollar against the US dollar. So that's something that I personally am quite keen to look out for. And apart from that, we don't have any really super important data. Of course, Australian GDP has some degree of importance, and flash inflation from the Eurozone also some degree of importance. It's just not really like top tier American data that we're looking for. And we've had an awful lot of disruption, of course, as we were saying, as Andreas was saying last week, and also as I was talking about last week. We've had quite a significant amount of disruption to the American data as a result of the government shutdown. So currently we have scheduled coming up not an NFP this week or next week, but I believe it should be on the 16th. Yeah, that's right. On the 16th of December, so about 2 weeks later than it would usually be, we've got two NFPs. Currently scheduled, the NFP for October and also the NFP for November on the same day. So that's really, really important, and we're looking ahead quite keenly to that. So we should be back for another live stream in the run-up and on the morning of that release, and we'll be talking about it in more detail. But in the moment, for right now anyway, we don't really have that much very obvious direction in the American economy from data, because we've had this big gap where there hasn't been any data. So the next really super important release coming out of the USA is, of course, the Fed's meeting, which is on the 10th, Wednesday 10th, so that's 1 week tomorrow. And currently there seems to be pretty wide consensus that there's going to be a single cut. It's not quite as absolute as it had been a little bit more than a month ago, but around 87%, large majority of participants based on CME FedWatch are expecting that the Fed is going to be cutting rates, a single cut on the 10th of December. So there's not necessarily a huge amount of intrigue there, but where we can find, I think, some intrigue is what's expected possibly to happen early next year, since the more hawkish stroke, less dovish scenarios seem to be at least moderately less likely, whereas the relatively more dovish scenarios seem to be more likely. But of course, there's quite a considerable uncertainty, I would stress, as to what's going to be happening in April and following. We have quite a lot of different expectations, no obvious majority for any particular scenario. So we want to be watching what's happening next week, and Andreas is going to be going into that in more detail, of course. Want to be watching what's happening next week with the Fed. What kind of signals or hints do we get in the press conference after the decision itself has been reached? So that's an important factor that we want to try to monitor. Yeah. Ryan Jerry says, Michael, what is your view on trading during public holidays? Let's answer that. And Chinya Machilila says, joining from Zambia. Welcome. Thanks very much for joining us. Let's see. What's your view on trading public holidays? I think really it depends, is the simple answer, Mr. Ryan. But I generally prefer not to do it for a few reasons. Since liquidity is usually going to be lower, that's one important factor. Liquidity is going to be lower, so you're more likely to get at least somewhat surprising results, and it's more difficult, I think, to get reasonably good execution for things that are affected by the public holiday. So gold on Thanksgiving, last week at American Thanksgiving, it's actually not a great example, because it wasn't really terribly, it wasn't really terribly bad around the public holiday. That's to say, obviously can't trade when it's closed, but I mean, like around the time of the public holiday, it wasn't really terribly choppy. But I mean, in a situation where you have more of a clear direction, then you're more likely to get just a bit of a choppy market. So I think it's a lot more difficult in that situation to be able to find reasonably good entries and exits. Leaving the position open over a public holiday, if you're a swing trader, or if you're a position trader, don't think this is necessarily an issue. But often an opportunity is, assuming it's open, something that's not affected, something that is only half affected, by a public holiday can be a good option. Like, for example, cable last week around the time of American Thanksgiving was moving actually fairly strongly. So that's one possibility, because of course Thanksgiving doesn't apply in Britain, and it also applies to Eurodollar, and it applies to various other instruments as well that you could find. So the most affected instruments, in summary, I prefer probably not to trade them, Ryan Jarius, but other instruments I think it's certainly possible to do so. It's just not really my habit. Don't usually trade over holidays. Usually public holiday, good opportunity to take stock, analyse what has gone right recently, what's not gone right, and so on. So hopefully that answers your question. If you have a different opinion, of course, it'd be good to hear it. Yep. And we have Ahish Gamit says, Indian user, welcome Mr. Ahish. And Fasola Akintayo, sorry, because it's all one word, a little bit difficult for me to pronounce. Sorry. So Fasola says, joining from Nigeria, welcome. Nice to have you here. So that's a summary for some of the most important events coming up this week. Canadian job report I'm looking at, also looking at PC from the USA. These are some of the most important releases, and to some degree we can look at Australian GDP. And I think what we would highlight, one of the main things that I would highlight from the upcoming Canadian job report is that overall it certainly looks like the job market in Canada is quite a bit weaker than the USA. We have had the narrative certainly of American economy doing worse, labour market in the USA doing worse. That has been a narrative ongoing for some time, since we had that very large sequence of downward revisions to employment, to the total non-farm from the USA. And I think there's maybe some evidence that has been continuing, although of course there's disruption from the government shutdown. So, but overall, doesn't seem to be worsening to a degree that Canada is, because considering the Canadian economy in its size, it's pretty high unemployment, significantly higher than the USA's. So something that's broadly negative, and if we see that trend continuing, then I think there's some possibility to be buying the US dollar against the Canadian dollar. Perhaps that might be signal from fundamentals. Ryan Jerry says, understood, thanks. Yeah, that's fine, no problem, Mr. Ryan. I would stress it's just my opinion, Ryan, who was asking the question about what's your view on trading during public holidays. Personally, I prefer not to do that. I would stress it's just my opinion, Mr. Ryan. If you have a different opinion, or if you found that it works for you, by all means, go for it. I just generally don't really do that. I don't really trade also in the very short term. Prefer usually to trade medium to longer term. So Canadian job report, that's one important factor that's coming up. So let's just take a brief look at this for dollar loonie, in that if we scroll out this chart, we have to scroll it out fairly far, and of course one of the classic methods, method is maybe a strong word, I don't want to use a regression transfer, I want to use a parallel channel, is we just try to draw lines on the chart and see, do these lines actually show us anything interesting. And for dollar loonie currently, I think we have a more or less established upward channel in the upper boundary of the channel. And I would just stress, when we draw a channel like this, these lines are meant to be areas. They're not meant to be specific levels. They're areas. And you can see that in some cases there's an interaction between a wick and the line. The wick of a candlestick might go above the top line, tail of a candlestick might go below the bottom line. That's fine. I don't think that invalidates the area overall. It's just something to kind of be aware of, that you might get a fake out of some sort. So I mean, but definitely the upper half, the upper boundary of the upward channel for dollar loonie certainly seems to be valid to me, since it's been tested 1, 2, 3, 4 times clearly since its possible establishment over the summer. And but the other hand is the lower line of the channel has only really been tested twice since it was possibly established in July, also in summer. So I mean, we maybe, I think, want to be aware that the lower boundary is probably less reliable than the upper. But based on that my opinion at least, broadly, that we're likely to see at least somewhat weaker job data from Canada, then I mean that's one factor that might lead us, I think, towards buying fundamentally. And also I think technically it looks more likely that buying is going to succeed here if we're going to be doing something than selling, since we're clearly within the lower half of this possible channel. Although we are below a couple of moving averages, we're above the 200, which is significant. Volume, relatively speaking, is quite high. We don't have any obvious sign of saturation, and ATR hasn't reached a new bottom. But of course, when it comes to trading dollar loonie, or really anything with the Canadian dollar, I think it is important to consider oil, since most of the time Canadian dollar has some correlation. Sometimes it has a strong correlation with crude oil. Whereas right now we can see that crude oil is not doing anything really very significant. It's not languishing, but it's certainly below 60. Doesn't seem like, for the moment, it's very keen to push back above 60. Of course, that can change quickly with oil, but it doesn't seem like there's any upward pressure on the Canadian dollar as a result of its correlation with oil. At least that's what we see now. So if I were to be doing this, and I would stress this is a demo account, it's not a recommendation to trade, I would want to be looking back to try to figure out where is a possible area for a target. And I think, assuming that we do broadly continue, one possible area, although this may be, I would stress, a little bit aggressive, might be around 142.5. Might take some time for it actually to get there, but as a longer term trade, that's a possibility as a target, and it could perhaps be reduced. So let's go with 142.5 with a potential target, and I would stress that this is just for informational purposes only. It's not a recommendation to trade. And in this case, I think the stop could possibly be a fair bit tighter. I could possibly set the stop around 139.5, or maybe 139 would give us a reasonably good ratio. So even with plenty of room for the price to move below the lower boundary of this channel, then we've got quite a good ratio. We can see here we've got a ratio of more than 2-to-1 of potential reward to potential risk. So for me, that's quite a good ratio, and it's something that I might take. Not a recommendation to do that, just an illustration of this is one possible option for how in practice you can get a reasonably good ratio if you're trading over the medium to longer term. And to monitor that position, I think it would be very important to be awake and watching what happens when the Canadian job report comes out on Friday. So that's one potential option that I think that I am looking at for this week and I'm considering actively. So let's look at where we are for the question. So we've a question from Ms. Joyce. What are the effects of core PC on the Forex market? Yeah, it's a good question. Let's look at that briefly. Generally, not very strong immediate effect from core PC on Forex markets. And I think one of the factors behind that is that, core figures for any type of inflation, whether it's personal consumption expenditures or for whether it's consumer price index, which is what we usually mean when we're talking about inflation, we usually mean CPI. It's more reliable. The core figures are more reliable than the headline figures, but since they exclude many things which are volatile, like usually food, petrol, stuff like that, then it's maybe a little bit less reliable. It's maybe a bit less reliable in terms of giving the actual picture of what people are paying, what people are doing, if you see what I mean. So the stuff it includes is more reliable, but the overall picture is perhaps a bit less. So typically, there's some exceptions, of course, but typically the traders don't really focus quite so much on core PC. And we could look at a couple of historical examples. Like if we look at let's take the one for August. So we look at how gold has moved on the 26th of September. Maybe we just want to bring a slightly lower time frame. Oh, no, sorry, that's the wrong chart. Let me go to gold and let's bring a slightly lower time frame. And look at how it's moved on the 26th of September to compare that with what was happening with PC at the time. And usually, there's of course exceptions, I would stress. Usually you won't see like a very, very strong impact from PC. So just let me find the right time here. So you have relatively modest sized candlesticks around the time that PC was released, and if we compare what the result actually was versus the consensus and the forecast, pretty much in line with the consensus, although slightly below the trading economics' forecast. And usually trading economics' forecast is going to be at least slightly different, whether above or below. It represents not quite the extreme, but close to the extreme of the range of estimates for something. So if we look back 26th of September, where was that chart? Yeah, look back at 26th of September, it doesn't really react very much. Whereas when you get a surprise, it's possible to see a little bit more of an impact from PC. That's true, but also I think it fits. How does that fit into the context of what is everybody expecting the Fed to do? Because if we think back to 26th of September, I know this is a little bit of a detailed answer, Mrs. Joyce, but just run with me here for a minute or two. If we look back at probably yes, we do want that. So if we're looking back to this period in September, then it seems to be pretty likely that we're going to get, or pretty much certain to get at least one cut, of course, by December, and fairly likely to end up getting 2 cuts. From where we were at that time in September, at the time, from where it was. So, and PC doesn't really change that, notice. After that comes out, we don't really get an immediate significant change in the probabilities. It's changing by a few percent, sure, but we're not getting some really massive change by any means. So I think it's important to understand the context of what is the Fed expected to do, and it's also, I think, important to consider with core PC or any other PC, how different is it from the consensus? How different is the actual figure? But then, of course, the rider that I would put in there, last point on this, Mrs. Joyce, the rider that I would put in with that there is it's very difficult to isolate what is the impact of the core figure from the headline figure, because they usually come out at the same time. So pretty much always, there's some exceptions, but they're quite rare. Pretty much always you're going to get core and non-core PC, monthly and annual, all coming out at the same time. So it's quite difficult, in my opinion, to isolate, okay, what's the impact of the core and what's the impact of the headline. Very difficult to do that conclusively, because of course they all come out at exactly the same time, and traders, I think, typically tend to focus on the annual figures and the headline figures more, but that doesn't mean that you shouldn't look at the core, especially if the annual and headline figure, for example, is exactly in line with the consensus, but the core figure is wildly divergent from the consensus. Then that's one case where it happens, it's more important. So hopefully that answers your question to some degree, Ms. Joyce. I would say in summary, it's not really one of the releases that if I scout the news, which I don't usually, but if I was to scout the news, it's not one of the releases I would really be trading, because I don't think the price is really going to be moving in a very exciting way around that time. It's not to say that you can't do that if it works for you. If it works for you, of course, go for it. But for me, it's not something that I've ever found to work. Yep. So Ryan Jarius says, do you think using technical analysis alone could make one profitable? This is a controversial question. I think the answer is yes. I just think that you would do a lot better if you also considered fundamentals. So, there's loads of different ways to answer that question, of course, Mr. Ryan. But I think the simple answer is, a relatively simple answer anyway, is it's more likely, I think, to succeed using only technicals if you're a scalper. When I say only technicals, you still do need to look at this. You need to look at the economic calendar. If you're only using technicals and you're not aware, I'm not saying that you personally, if a person is only using TA and they're not even looking at an economic calendar, well, yeah, they're setting themselves up for disaster potentially. If you're trading the wrong way, inverted commas, around an NFP, then you might, of course, lose huge amounts of money. You need to be aware at least of the events that are coming up, right? But apart from that, I think it's quite possible, yeah, to trade only using technical analysis. I just think it's more reliable in my personal experience, and it's also better and it's less stressful to combine with fundamentals and trade a bit over the longer term, because it's kind of necessary, I think, in the shorter term to focus more on technicals, and it's, I think, helpful in the longer term to focus more or less equally perhaps on technicals, fundamentals. And the fundamentals, the summary fundamentals, they give you the idea for a trade. The technicals tell you more about how actually you're going to execute this trade. The simple answer is, I think, yes, but I think it's better for the average person, and it's certainly better for me to combine it with some basic amount of fundamental analysis. just to be able to be more successful and hopefully do better. That's my personal experience anyway. And I would just stress, last point on this about Mr. Ryan's question, I would just stress, like, the fundamental analysis that we're doing here, we're not doing anything very advanced. What I'm talking about here, this is pretty much like the limit of the fundamental analysis that I would be doing regularly, because you can't really do fundamental analysis of a currency in the fully accurate sense of the term. Because if you're to go into, let's say, I don't know, you go into like pretty much anything. Let's go into service PMI, for example, from the USA. This certainly has some degree of import if you want to do actual fundamental analysis of the overall American economy. It's just you as an individual trader and I as an individual trader, I can't look at all of these numbers. It's impossible to monitor all of these numbers. You need like a team of analysts to do that. Like if you're working at a hedge fund, you're probably not going to trade Forex at a hedge fund, but if you're working at somewhere, that an institution that trades Forex for whatever reason, you need like a whole team of analysts, and all of these people are focusing on different specific aspects of this, which you can't do personally yourself, but I think you can certainly focus on the most important of these data. You can focus on monetary policy, you can focus on jobs, that's to say the labour market. You can focus on inflation, you focus on GDP. In some countries you might focus on trade, but there's only like really 4, 5, 6 main factors you have some awareness of and you kind of monitor regularly. And most other stuff, generally speaking, like industrial production, is not really that important. Money supply, ratio of debt to GDP as a trader of CFDs, an average trader of CFDs, these things are not that important. You don't really need to go deep into fundamentals. You certainly don't need to have a degree in economics or anything like that, I think, to do basic fundamental analysis, basic awareness of the news and narratives and sentiment. But I would stress that's just my opinion. And that is a very good question, Mr. Ryan. That is a controversial question. I would stress it's just my personal opinion. It's not like there aren't any right or wrong answers there, I think. So thanks for questions. Thanks very much everybody for the questions so far. So I think one of the highlight trades for me personally this week could be for dollar loonie. I was just, that's just my opinion. It's not a recommendation for anybody else to take such a trade. So let's look at Bitcoin. Let's look at all of the main instruments, and I'll just share what I think. Let's just share some of my opinions, right? And if you have any questions, anything else you want to be discussed, please by all means go ahead. That would be great. If you have any questions, whether it's specific instruments or general questions you might have that Mr. Moran has been asking. That's good. So let's talk about Bitcoin a little bit first. We've seen the price bounce so far with some degree of momentum from the area around 8,000. Because when we touched there around 8,000 on the 21st of November, we had a pretty strong reaction from that area, just slightly above 8,000. We can see there's a pretty long tail there, one of the longest tails for Bitcoin that I can see on the daily chart anyway, since October, since it was a bit more than a month before. So, I mean, that usually suggests that we have some degree of buying pressure in that area, the sellers are getting cold feet, this sort of thing. Saturation indicators, of course, so that is to say slow stochastic, Bollinger Bands, RSI, you name it, whichever saturation indicator you want to use, not really very reliable for cryptocurrency, and they also don't give an obvious signal here either. But I think the key thing, and I would just stress that there is certainly a possibility that the price continues downward. It depends, I think, on sentiment, and it depends on various on-chain data. I just think the kind of devil's advocate there, and the part of the reason why I would be quite cautious, I personally would not be planning on selling Bitcoin, just my opinion, is that, I mean, volume obviously does not support this trend based on CFDs. If we bring this out a little bit, we can see like actually quite the contrary. Volume actually signals that this is probably not a long-term downtrend, because we can see that it holds like more or less consistently for most of the summer. I mean, it's a cryptocurrency, but I mean, even with the crypto, we're going to get a little bit of a drop in August, but while in other markets you might see a big drop, and then something kind of unusual massively drops off in October, the volume for CFDs. I would just stress, of course, this doesn't tell the whole story, because volume for a CFD is just for this specific broker. I mean, for Exness, obviously it's quite a big volume, but still it's just for Exness, it's not for CFDs in general. Whereas if we go to volume and open interest for Bitcoin futures from CME, we can actually see, yes, there is also quite a big drop-off in terms of volume, not so much open interest, but certainly in terms of volume for the first part of November. So that's one of the things that makes me kind of reluctant, I would say, or more cautious in this context with Bitcoin. I just wouldn't be mad to be selling in here. I wouldn't necessarily be keen on buying either as a CFD. I just would kind of want to wait and see, okay, what's going to be happening with the Fed? That's one really, really important factor. What kind of signals do we get from the Fed? Are we getting a Santa rally of any kind? That's also key when it's December. We're all kind of looking forward to Christmas. Those of us who are celebrating anyway are looking forward to Christmas. So these are quite important factors, I think. And it's okay if we possibly miss a good opportunity. For me, at least, it's quite okay to miss a good opportunity, because one of my common mistakes is seeing something like this and not considering volume. When I think that's a big mistake, because usually within Dow theory and within generally within markets, even excluding Dow theory for a second, you usually would not expect a trend to be ongoing or continuous when you've got pretty low volume. It's not obviously supported by volume, so that's one I think important factor. But then part of the reason why I'm not super mad on buying, of course, either is that the sentiment overall looks pretty weak for Bitcoin right now. If we look at various on-chain data, we can look at that later. I don't want to get too sidetracked with on-chain data for now because of the time, and I want to come back to some more questions. But basically, if we look at on-chain data, obviously it's not super positive overall. We've got generally increasing balances on exchanges, and also from technical perspective, this 20 SMA is not looking likely to be broken anytime soon. So I'd be wanting to just monitor the situation. I would stress that's just my opinion. I would just be wanting to monitor the situation and see what happens. Whereas for gold, I think broadly things look maybe a little bit more positive compared to Bitcoin, because yesterday we didn't actually have a closing high. We had a closing high, relative to just barely a closing high relative to the 13th of November. That's true. Of course, we didn't have a closing new high, and much of the gains that we had intraday yesterday were actually reversed. So maybe it's not a great idea, for me at least, it's not a great idea to be thinking about buying in immediately. Maybe want the price to move a little bit lower. But I don't think it's such a clear pause signal like what we had first half of November, around middle of November. Because if I'm looking at the chart here, 13th of November, that's like really obvious doji. That's like almost a textbook example of how we can use a simple doji. In that we have some initial momentum, and then once we're actually reaching this high after a couple of days of movement, a doji, and then fairly large down candle. So if we see something like that happening again, then I think we have more confidence to sell. In the short term for gold, I would probably be thinking more about selling than buying. I would just stress that we've got the Fed's meeting coming up next week. Maybe not, or for me at least, I'm not really thinking about a new long-term CFD trade, at least for gold. For the time being, I would probably be thinking more about selling than buying, but that would be more like over the short term than the long term. The issue with that, of course, is just finding a reasonably good ratio. If you bring a slightly lower time frame, let's bring a little bit of a lower time frame here. Then I think moving to one of the next finding the way to one of the next moving averages is certainly an option. It depends really on what kind of time frame you want to trade on. You just need to be a little bit careful about what the ratio would be. Because if we were to do this on the daily chart, which I am not going to do, I'm not sure that this is a good idea, even for me. We can maybe set our target at, I think, roughly about 4,090. Although, I would stress that's not a very specific area. Where can we find a good place to set the stop? I don't know. Possibly about 4,270, and we're not going to end up with a great ratio here at all. And no, it's not a very good ratio, and also relative to the size of this account, I stress this is a demo account, remember, then it's going to be, we're losing a bit too much, or potentially making a bit too much, because we're having quite a significant change here to get to either of these targets. This is a daily chart, remember, and it's unlikely, I think, to get to either the target or the stop before the Fed's meeting. So be inclined for the moment to wait out, or to think about something that's a little bit more conservative on a lower time frame. So if we zoom out a little bit on the, this is the hourly chart, I think it's quite possible to see the price moving to the lower Bollinger Band on the hourly chart, and that gives us maybe a little bit more realistic of a target that we might actually reach before the Fed's meeting happens. So let's go with 4170. 4170. And then the stop is, of course, a lot harder in that situation, but I think a possible option would be about 4220. Since that's within the value area between the two moving averages. And again, terrible ratio. It's actually negative ratio. I just don't think, I mean, even if we're trading fairly short term, for me personally, I would stress it's not advice or recommendation. We certainly don't want to be setting our stop within the hourly candle, within the context of this kind of movement. Because it might just be retraced. It's important to help with ATR, I think, in that situation, to see ATR times 2 probably in the context would make sense. And if we can't find a reasonably good stop within ATR times 2, let's just wait and do it later. That would be my perspective. But of course, if somebody has an alternative perspective on gold, then that's welcome, very much welcome. So let's look at some currencies. Let's go back to the questions for a minute. Then let's look at some currencies. Yeah. So yep. Okay. Do you think technical analysis? Yeah, we've answered that one, I think. And Henry Daka says, "Love the way you respond to questions. That's great. Thanks, Mr. Henry. Please ask your own question, and hopefully you'll love the response. You might not, but fingers crossed you will love the response. Right. So euro dollar. Let's look briefly at euro dollar. And I just want to zoom out a little bit to kind of illustrate, I think, that there's not that much really interesting going on here. If we're going to be trading Forex over the medium to longer term at the moment, I think it's probably better to find another pair such as dollar yen, perhaps, which we'll come on to in a few minutes. We've got an overall narrowing range, and we can see ATR. Let's just make that a little bit more visible because it's not very clearly visible here. Why is it doing that? Maybe? Yes, okay, good. Right, let's just make that a little bit brighter. Yeah. So that's a bit more obvious. Yeah, so we can see that ATR has reached new lows. ATR is very, very, very low, like compared to what has been the typical for much of the year so far. I'm kind of excluding April because, of course, this is a bit of an exception. And, I mean, within the very, very long-term context, it's hovering fairly close to highs, not doing anything very interesting. So as a swinger, as a position trader, this is like really not the kind of chart that you want to see. It doesn't give you any obvious opportunities. And it's also fairly close to quite a significant technical area, 116. So one possibility, of course, I would stress it's a possibility, it's not something that's by any means guaranteed, is if we use one of my favourite techniques and we just draw lines on the chart, then possibly, it's not very good that, is it? Possibly we get the formation of a triangle. It's going to be more or less a horizontal triangle, and maybe we expect some kind of breakout and increase in volatility. Let's go a little bit further this way. Maybe get some kind of breakout increase in volatility just before Christmas. There's a possibility of that happening. Just not too keen personally to sit around and wait for that to happen. Again, I would just wait until let's see what happens around the Fed's meeting, whether we get any kind of confirmation of what's coming next, not confirmation, but hints as to what's coming next, and possibly we get increase in volatility around just slightly before Christmas time. But for the moment, I think Eurodollar is not really very interesting. Whereas cable is more. Cable, I think, is definitely more interesting for a variety of reasons. So the British budget, let's not go into too much detail about that, but we can go into some degree of detail possibly about the budget. In summary, the budget that came out last week from Britain was controversial in that lots of people accuse the government of lying. Right, you can read a lot more in a lot more detail about this. Accuse the government of lying, and there being a split between the Office for Budget Responsibility and the government. In that the Chancellor supposedly has lied about how much income the government has and how much headroom it has in its fiscal rules. Is that true? I don't know, and as a trader I honestly don't really care that much either, but there is some degree of controversy there. Whereas the budget itself is something that's been received broadly positively. We can read a little bit more about that if you want, but I'm not sure that we necessarily need to as traders, in that the government has placated the backbenchers. The Labour backbenchers have been kind of placated with handouts essentially, increase in the number of children who can claim child benefit for, and at the same time, the thresholds for taxes have been frozen until I believe it's 2029. So that's something that's positive in terms of more fiscal headroom, and markets have reacted quite positively to that. So if we take, I want to just briefly look at bonds, because recently around the budget, there's been quite some considerable focus on the yields of British bonds in the past few years. They usually tend to go a bit haywire around the budget, given the government is quite indebted and everybody's worried about, okay, what are they going to do next to try to fix this? Not the case this time. British bonds actually pretty calm. Yields not moving all that much. It's not to say that they might start moving again if there seems to be some political instability developing, but it doesn't seem to be something that's happening. So broadly speaking, that's why, but overall, with some caveats, I think the situation maybe looks more positive for the pound compared to this time last month. So I think that's maybe an interesting option, especially if we're getting some negative data from the USA. We're getting more a great impression that the Fed is possibly going to be cutting rates. We might, I think, see some further strength for the pound. Probably not the start of a new uptrend, but certainly some potential for the bounce to go further. Because I don't think that there necessarily is a clear trend here. I mean, one of the basic principles usually in technical analysis, it depends who you talk to, but one of the general basic principles is to have a trend, we usually need to count 3 new highs or new lows. Whereas in this case, if we take as our starting point the high in July, which is quite a significant long-term high in July, right? High of number of years, I believe. And since then, we've only really had 2 clear new lows. It's debatable whether this is, but this definitely is, yes. And this also definitely is, whereas this isn't. This isn't a new low here from November, right? So we don't necessarily have a confirmed downtrend, I think. I think it's more like a sideways trend, given that after this significant high in July, then we have another high, but it's lower in September. So it's questionable. I mean, this is something that I will analyse and debate more. But I think the summary is, I don't think we have any confirmed trend in either direction, right? Is what I'm saying. So I think it's entirely possible for the pound to move up here. Just one of the main questions is, how aggressive are we with this? How long do we want to hold this open in the run-up to the Fed? Since Fed's meeting coming up next week, we really, if possible, as a swing trader, we want to be very careful about leaving things open around then. But if we were to buy, and I would probably be more inclined towards buying at the moment, I'd probably set a target roughly around 134-ish. So that's around the value area of these 2 moving averages, the 100 and 200 moving averages. And the stop is a little bit harder to get a reasonably positive ratio. But just for the sake of argument here, I would probably set around 131. That's not really an ideal place for a stop. I would prefer, really, if possible, to set the stop a little bit lower than that, and if necessary, make the target a bit more aggressive for a longer term trade. But the ratio is not fantastic, but it's okay. It's not fantastic. I think the main kind of question mark there is, we've seen for several days the price has been testing the 50 SMA from bands, but it's not actually doing anything to push above there. So that's why I personally might be inclined to wait for some kind of at least moderately important news before actually doing that. I just think the overall balance of the simple approach to fundamentals and the technicals probably is more likely to suggest buying here. Just we also want to watch out for the overbought. And definitely I think an interesting forex pair at the moment is dollar yen. And it's interesting for a few reasons. Well, actually, let's check the questions. So sorry, before I go on about that. No more questions. Okay, right. So thanks everybody for the questions so far. If you have any more, please by all means ask. It'd be great if you have any more questions, because I think we have only about 15 minutes left. Let's look at dollar yen. So this is interesting because there's pretty wide expectations, at least in some quarters, that there's going to be an intervention by the Bank of Japan if it continues going up. So that's one important factor, because if let's bring quite a long-term chart here for dollar yen. we've had like pretty consistently just gains without any significant new lows since COVID, more or less. Not quite literally since COVID, of course, but I mean in the years after COVID, when we've had most economies high inflation, rising rates, and so on and so forth. And the yen has been pretty consistently weak for quite a number of years. So there's likely, I think, to be a further intervention if we get the price moving significantly towards about 160-ish. So that's the main kind of caveat for if you're thinking about buying. Certainly, I think by the time we get to last summer's highs, there'll be some sort of intervention from the Bank of Japan, which is probably going to drive the price down. Maybe it's going to drive the price down quite significantly, but overall, I think riding the trend for some period maybe makes some sense, since there's a few more yens that could be squeezed out there, possibly. And I think a similar sort of situation, although of course there's going to be some debate, let's see what Andreas thinks about this next week, is pound yen, in that I think the pound might have a chance to move up against the US dollar, and the yen might have a chance to move down against the dollar. So that's one situation where we can use this kind of cross pair, as we call it in older usage, of pound yen, which I think certainly has potential to move up further. And the pound moving up against the yen in itself is not something really that is necessarily a big focus for the Bank of Japan, because we have a similar kind of impact from that intervention. And the pound is quite strong. It's not necessarily something that impacts the Japanese government. Very few of its imports, of course, are in pounds, so they don't necessarily need to care about this very much. And broadly, it's kind of positive for various exports being effectively cheaper for Britain if they have to pay fewer yens for them. So, but I think again the main question here is very close to the highs, very close to last summer's highs, and also pretty strongly overbought. This is a case where volume, again, I think is quite important. And volume here, overall, I think broadly does support the uptrend. It's just a question of finding a reasonably good entry, maybe timing it with data. Silver, let's look at that briefly. So recently we've had a sequence of several short squeezes for silver. The price has moved up like pretty strongly. It's reached some new highs, significant new highs. And you can probably guess what I'm going to say next. I think it's a big risk really to take any medium to longer term position here, because while it certainly looks like, okay, we've got the volume on side, we've got an increase in volume, we're overbought, just not overbought for like a really long stretch of time. So maybe there's some potential for the price to move further up. It's just, I think, my personal opinion, an awful risk to be buying in very close to the tops like this. I personally would want to wait for the price maybe to move back towards the moving averages around the value area, approximately ish, or somewhere around there, before like thinking seriously about buying it if I were to do so. But but equally that means I think that selling in, of course, is quite a big risk too. Just my bias at the moment would be for the short term, probably more towards selling, and I would be thinking about using a trailing stop on MT5. I think that's one possibly very good option that you have here, that I might take use of here, and just riding it. Let's see how far it's actually going to go down, and setting a fairly tight trailing stop. So if anybody has any requests, any questions for anything else, any other instruments you would like to look at, that would be great, of course, or any other questions in general, that also would be good. Whereas some pairs for the moment, I mean, we talked about euro dollar before, and also dollar franc for the moment, I think just not very interesting at all. It's not really doing very much. And it's completely off my radar, to be quite honest. I'm not sure it's going to be start to do anything very interesting in the near future, since monetary policy, amount of risk, trade wars and so on, to some degree at least, the intrigue has declined for these things. We're looking more at things like, AI bubble and stuff. So yeah, let's briefly talk about that. So it doesn't have to be The Guardian, could be anywhere else you want. We have various central banks and various analysts and so on talking about AI shares and related shares have these extremely high valuations. Is this a bubble? What's going to happen if the bubble pops? All, of course, legitimate questions, which certainly we as traders should be asking as well. I just think that it's maybe not helpful for us to go too deep into this concept because we will often end up trying to preempt, which as traders of CFDs especially, we don't really want to try to preempt the bursting of an AI bubble because a lot of the time we're going to get it wrong. Shares, they usually go up, whereas if crash starts, if we see some evidence of a crash starting, and that could come from indices, could come from individual shares, then we kind of, if it's appropriate for us, I would stress, we want to join in with that. We don't want to try to preempt. And I think this is something that's kind of obvious for a while. Valuations of AI and related shares are extremely high relative to their earnings and relative to the actual dividend yield that they're giving us. These important factors. So Nasdaq, and Nvidia actually has even decreased its dividend recently. So that doesn't mean to say don't buy, of course. It just means I'm not trying to FUD or anything like that. I just mean we need to be aware of the possibility for this to happen. And also, I think, to be fair, I mean, nobody's going to be buying Nvidia for the dividend anyway, so it doesn't really matter in that regard what the dividend is for Nvidia. Everybody's buying that for capital gains pretty much exclusively. So Joyce asked for the Dow. Great, thanks very much, Ms. Joyce, for the question. Let's look at US 30. Let's look at the Dow Jones. So I think in general, as with most indices, the regular one, as with most indices, we've had a bit of kind of choppiness recently because there's been these concerns about valuations of AI shares in general. But I also want to look at the earnings calendar. Since, recently, that is to say, within the last within the last approximately few months, the relevant ones, earnings reports, have been broadly pretty positive. Some exceptions to that, but overall, I'd say they've been pretty positive, both relative to the previous and relative to the consensus for the relevant shares. So I just think part of it is part of the issue here is maybe some people that just don't want to put too much more money into this stuff. I mean, they can see the price of various shares relative to the actual dividends that they're paying, and I would just stress, of course, that last month we had overall amazingly positive earnings from Nvidia, big tick in the box. That's great. It's a good thing. And that, of course, appeals to a certain segment of traders and investors, but various others are going to be more reluctant about pouring more money into this now when they look at the chart of it. Whereas consumer discretionary, overall is not doing fantastic recently. It's just not, I wouldn't say it's doing terribly, it's just not doing maybe as fantastic as we might hope it to do. Whereas recently various health shares have been doing actually quite okay. That's not super relevant for the Dow. Let's look at the Dow. So within all this context, I think there's going to be some degree of uncertainty ongoing for a while, maybe for a few weeks, and then before Christmas, is there going to be a Santa rally? It depends, I think, on the Fed. It depends on much of the economic data that's coming up from the USA, I think, as well. And we don't have any very significant earnings that are coming up immediately, I believe. But let's just check the calendar. Broadcom, that's actually quite an important one. Yes. Broadcom's important. But apart from that, that's relevant to the major indices, we don't have any huge earnings that are coming up within the next few weeks. So I think there might be some degree of focus on the regular economic calendar to see, most importantly, the Fed, but also within a couple of weeks we have the NFP and we have inflation and we have GDP within just a few days of each other. So it's important to see what are the actual results from that, I think. But broadly, I think it's likely probably to continue sideways for a while, maybe for a couple of weeks, Miss Joyce, just my opinion. And then let's see what happens beyond that. Just in general, for us as traders of CFDs, maybe this doesn't look super appealing right now. The Dow doesn't look super appealing. We can maybe build or we can add to long-term buying positions, possibly, while being aware that you might get some kind of correction or you might get some kind of retracement if people are more worried about this stuff, issues with AI and everything. But equally, I think there's something to be said for, with indices specifically, maybe taking a break in December and coming back to it fresh in January. Yeah. So, question from, and thanks, Mrs. Joyce, for the question. Question from Next Gen Billionaires. Do you recommend learning fundamentals as much as I am learning technicals? Why? Basically, the short answer is no. I would probably, I would stress I can't recommend anything. I think you need a balance between them, but it depends also on your strategy. In that, if you're a scalper or if you're a day trader, you probably need to learn more about technicals, and if you're a longer term trader, you probably need to learn more about fundamentals. But of course, that depends, I think, on your particular approach within the strategy as well. It's like we were saying earlier. If you're looking at a long-term chart, I think that fundamentals are telling you broadly the story behind this movement of the price, whereas the price and the indicators and the patterns and so on and so forth are giving you more input as to where is some of the better or at least less bad areas to enter and also to exit your trades. So I think it's important to have. I think it's very important to have a balance between the two as a longer term trader, whereas for a shorter term trader you probably want to focus more on technicals, not exclusively but a bit more. And as I was saying earlier to who asked that, I think it was Mr. Ryan, when he was saying about technical analysis alone, I think it was that question. As I was saying earlier, fundamental analysis doesn't need to be something super advanced. You don't need to pay like thousands of dollars for a course. You don't need to get a degree in economics or something like that. Just kind of like fiddle around with trading economics, read a little bit. I would obviously take this opportunity to plug Exness Insights. So now that I've started to do that, let me do that. This is quite a good and I think convenient way to get the lowdown on some of these important topics. And it doesn't go too deep, right? So if you're looking at things like... this is one possible option. All of these different things that you can learn about. All of these different things that you can learn the basics about. This is also, I think, good article about how politics can affect oil. Loads of different articles you can get on Exness Insights. It doesn't have to be Exness Insights. I just instinctively like to plug Exness Insights where possible. So you don't need to learn the very advanced things. I think it's important to learn the basics and to kind of monitor them occasionally. Doesn't need to be scary to learn fundamentals. Some traders would say that, and I initially, I suppose, found it somewhat scary, but after a while of fiddling around with these tools, and for shares, of course, things like you want to learn a bit more about the actual numbers behind it, of course. It's not necessarily very scary. It can actually be fun in some cases. So thanks for the question, Next Gen Billionaires. Right, next question from Henry Daka. Does the AI issue also affect commodities? Yes, I think so. Because if you think about it, I'm just thinking about it at a very high level here, right? How specifically it works is, I think, something that we can certainly debate. Thinking about it at a very high level, all these data centers that are being built for AI or likely to be built for AI, how are they going to be powered? Are they all going to be powered by green energy? No, I would assume they're not. So, if there is an ongoing, rally in positivity and further development for AI, you would probably expect that oil would go up with it as well. Maybe it won't. Of course, it depends to what extent there's a green transition. But certainly, I think for gold, if you start seeing, let's bring along a time frame here, if you start seeing like fear, uncertainty, doubt, and possibly a correction or even a crash in stock markets, usually expect gold, after the initial panic, gold to go up in that situation. Whereas the stock markets, and particularly tech shares, are doing quite well, usually gold is going to do less well. That also depends on monetary policy, of course. I think that's kind of like the simple way of thinking about it. But if you look more granularly, yes, in terms of day trading, or not necessarily day trading, but shorter term trading, Mr. Henry, then I think it depends on loads of different factors as well. This is just kind of like one of the big things, I think, that you should consider, that we can consider. So Next Gen Billionaire says, thank you for your response above. What are your thoughts on ICT concepts trading? Sorry, I don't know what you mean. This is my ignorance, I'm afraid. Next Gen Billionaires, if you could explain a bit more about what you mean. ICT, maybe I can help you. I don't know, or maybe I don't. Maybe I don't think anything about it. Sorry, I just don't know what that means. ICT concepts. Sorry, that's my ignorance. I don't know, I'm afraid, what that stands for. So, but I can certainly try to answer if you can explain a bit further. And thanks everybody for the questions. So I think we're just pretty much coming to the end. So I just want to remind you, please, at the end of the stream, that none of what I've said here is advice. It's not a recommendation to trade. It's not a suggestion or anything like that. It's just food for thought. And something that you can possibly analyse further and hopefully think about. You find something useful to think about. And you want to know more, you can follow us on Twitter. You can follow me personally on Twitter, mstark_Exness, or you can also follow my various colleagues, both from the Market Strategists and also from my immediate colleagues Andreas and Stan. And thanks for joining the stream, and we should have another stream at the same time next week. Excuse me, which if you're subscribed to Exness notifications on, you should be notified immediately when the stream starts, and it'll go under live. And also, I think tomorrow we should have Kojo doing a stream. I'm not sure about that, but usually Kojo, if he's doing a stream, it would be on Bill Wednesdays. Yeah. No, we're not quite done yet. I know there's some more questions. I just wanted to finish that particular point. Yeah. So Most High 18 says, what's your thought on the pound Swiss? Yeah, let's look at that. I think generally franc is not super interesting for the moment, but that's just me personally, right? Whereas I think for pound franc overall, I might be inclined to be somewhat positive about it since the budget was relatively well received. But it's broadly, and I think Most High 18, it's in a similar kind of technical position to cable, to the pound against the dollar, and that we've had a moderately strong bounce since around the middle of November, and that's basically held after the budget, more or less, I would stress, but we're quite close to important technical area, which is the 50 SMA from bands. So I'm just not sure that a continuation upwards is really all that favourable here. It depends definitely on the data, and it depends on what's developing with monetary policy. I think I might maybe be more inclined to be selling here, but it depends on lots of different factors. I honestly am also not very well up on what's going on with Swiss rates, so not very well up on that honestly at all, because I mean if you think about purely based on rates, I mean, it almost never is purely based on rates, but purely based on rates, you would expect this, of course, to be a lot higher. Pound franc, if you've got 4% differential between two major currencies, you'd expect it to be a lot higher. But then, of course, I mean, nowadays, the pound is certainly a risk-on currency, broadly speaking, and the franc is obviously one of the three traditional havens. So that's, I think, an important factor too. I just mainly want to wait to see how is the political developments in Britain that we mentioned earlier playing out, and I also would want to see how is monetary policy developing. And there's not any immediately important economic data, but hopefully we'll be coming back to that question next week with Andreas, or possibly tomorrow with Koto. But then the problem is you're not going to get Switzerland at all if you do that, right? Maybe get some Switzerland if you do that, yeah. No, I'm not sure what the catalyst would be immediately. Because the British job report is going to be the following week, right? That's going to be the same week as all that big slew of American data. And yeah, British monthly GDP on the 12th, yeah. But there's something I might just come back to next week. So my thoughts is, I know this is a bit of a useless answer, but my thoughts, Most High 18, I don't really have any thoughts about it, to be honest. I would probably be more inclined short term to be selling, but perhaps long term to be thinking about buying. That really depends on sentiment and upcoming data. Franc right now is not really something that I'm focused on, to be honest. So I'm not really the best person to be answering that question. I haven't thought about it a lot. So I know that's a bit of a useless answer. Sorry about that, Most High, but it's an answer of some sort. And Joyce says, thank you, Michael, for a insightful, informative session. No problem. Thank you, Joyce, for coming. It's great to see you again. Yep. And so Next Gen Billionaire says, there is this ongoing trading way brought up by someone named Inner Circle Trader and has built strategy based on liquidity concepts, fair value gaps, order blocks, and so on that price draws to. I honestly don't know anything about that, but I will look it up. I will make a note to look that up, Next Gen Billionaires, after this, and I will analyse it and I'll test it. Yeah, I can certainly do that. Hopefully for 2 weeks' time, I'll let you know what I think. I mean, I just think, the summary, obviously I don't know anything about this yet, but I mean, in general, like for us as retail traders to find an actual fair value gap is quite difficult, because how do we determine the fair value? Based on what sentiment, based on what sources do you determine what the fair value is? It depends what it is, but let's say if it's for a forex pair, I think it's very, very, very difficult to do that, or more or less impossible. And I mean, various liquidity concepts and order blocks, I think the limitation of us as retail traders is we only really know about this from our broker, usually. Not that our broker is untrustworthy, I'm not saying that. I'm saying that the broker is maybe not representative of the broader market, since it's decentralized. So let's see, I don't know. I'll certainly look it up in a Circle Trader and the strategies, and hopefully we can do. We can just we can talk about that more maybe next week, hopefully. So Bowstie 18 says, all right, thanks. Yeah, thank you for asking the question. So it's not a very useful answer. Maybe we'll know a bit more next week, or maybe tomorrow. If Kojo is going to be streaming tomorrow, you can ask Kojo, and Andreas will be streaming next week. And then Professional Broke Mima, are you related to Tony Stark? No, I'm not. It's either that or it's Game of Thrones. But no, not related to Tony Stark. Don't make weapons. Yeah, no Iron Man. But yes. Henry Decker says, IC traders just complicate trading. My thoughts. Okay, interesting perspective. I honestly don't know anything about this. There's lots of things that I don't know. I'm always learning something new, so I'm certainly keen to have a look at that and try to learn something new. Yeah, and hopefully have something to say about it in 2 weeks. Yeah. So in the meantime, we have a stream coming up from Andreas next week. So it should be next time, this same time next week, which will be the 9th of December. My colleague Andreas is going to be live streaming, so hopefully you can join him for that. And then back the following week from that, I'm going to be live streaming again. So hopefully you join us again. And in the meantime, you want to get updates and know what's going on, you can follow us on Twitter. So you can follow me, X, formerly known as Twitter, mstarkexness. You can also follow us on TradingView. We're active and we're giving you the weekly idea for a trade, the market outlook every week, and also podcasts. There's various material that you can follow, and hopefully see you again for another live stream. So thanks very much everybody for joining, and of course if you have any further feedback, further questions, then you can drop a comment after we've ended the stream, and hopefully we should be able to get back to you. Maybe not immediately, but we'll be able to get back to you at some point. And just please remember, last thing, please remember, nothing here is advice, nothing here is a recommendation to trade. This is all just my personal opinion. I often get it wrong. Don't, take what I say as gospel or something. You should always try to do your own research and trade responsibly. Yeah. So thanks very much for joining, and hopefully see you again soon. Goodbye.